Well, the stock of the moment is Indigo, and I think this letter that Mr. Gangwal has written to the board of directors, I think it's a 4-page letter that he's written, and some very serious points is making in the end. In closing, let me mention that I've set up a website, governanceindia.com. This is where he has put that letter actually, where I'll upload relevant information as needed and also address false narratives planted in the press by unnamed sources who hide. So this is something serious here, 4% down on that.
Clearly too cantankerous.
And this is ridiculous. I mean, the way it's happening between two promoters, I think it's high time. You know what I think SEBI should do is just stop trading in Indigo and say that, okay, let's first find out what's happening here. This is ridiculous. I mean, it's India's largest aviation company, perhaps the only now, surviving aviation company. It's doing so well. So much market cap is being, changing over a period of time. And just look at the chart over the last 3 months. It's ridiculous. I mean, the way things are happening here.
All right. Well, we'll keep tracking that story for you. For now, let's also talk about another company. PI Industries is the one on our radar. The company reported an inline set of numbers a few days ago. Mayank Singhal, the MD and CEO of PI Industries, joins us on the phone line to give us a sense of which way things are headed. There are, of course, the global worries. There are trade tensions as well. So let's find out whether a slowdown is underway. Mayank, hi, good morning. Amidst all these challenges, your company has posted a revenue growth of over 24%, which is quite commendable. How are things looking as we speak? Will this growth rate sustain, or are you expecting a bit of a slowdown in the rest of the fiscal?
Hi, good morning. When we look at the performance for the quarter, yes, it has been a great performance. And as we have already indicated, we are looking for the present year, since we are already sitting in a good order book position, about 20-plus performance. The export business is looking up. While there has been the global situation is whether there is a slowdown in the agri-economy, but overall, if you look at the areas in which we have chosen to play, specifically the products and the molecules that we are in, then they're looking on a very positive side, and we see a good demand. And compounded on top of that has been the benefit that has come through from the pressures from China, which is in terms of the latest challenges that have been in China. So the global companies are more deeply looking to look at India as a core hub for supplies for these products. And PI being one of the pioneers in the area of exports for custom manufacturing has been one of the key ones in the radar to benefit from that.
Does the yuan depreciation or devaluation impact you?
Well, we don't see that because we are primarily playing ourselves in the patented products, whereas you know that more than 96% revenue in this business coming from patented products. And it is more about risk and quality and time to supply them. Most of the products that we are producing, we are one or two. So we have either one or two of the suppliers of that in the world. So I don't see that yuan as a key challenge, specifically given that if you look at the United Markets in any case, there's a huge duty structure for exports going from China to the US.
You can be reasonably sure of maintaining this level of exports. I mean, it was a 60% growth in exports. What is the level you think you can maintain for the year? You may already have contracts, no?
We had said that the organization look at 20+% overall growth. I mean, quarter to quarter would not be the right way to judge it. This quarter has been good based on the demand that we've seen and obviously the product mix. And over the year, we do see about 20+% growth for the company.
20 plus volume, or is it revenue?
Revenue.
Okay, 20+ revenue growth, all right. You did have a capex plan of around 450 crores in this fiscal. Do you plan to scale it down because there's been some challenges in terms of growth externally, or will you hold on to that capex plan? And how are you planning to fund it? Mayank?
I can commit by. Hello.
Go ahead.
Yes. We are continuing to go ahead with our capex. We see no challenges as this has been backed by an order book that we have in place. So we are well on the way to complete that.
Okay, and how will you fund this capex? I mean, are you looking to raise any debt, or will it be from internal accruals?
Well, mostly it's all in funds and accruals.
Okay, if you could speak up a bit, how much of volume will come on stream when?
Well, Well, these plants are supposed to be expected. One plant is expected to be completed by the third quarter of the year. And by the time we stabilize in the last quarter, we expect to see some upside of this plant giving us revenues in the next financial year.
Okay, and will there be an improvement in realizations, you think, in the current year?
Hello?
Will there be improvement in prices, in realization? Oh, right. Okay. Well, the phone was misbehaving from the start, but I think we've got a fair amount of info that there's a 20+% revenue guidance, and the capex on stream gets done by FY20.
Okay, for now, let's look at the market. It's a powerful short covering move that you're seeing right now. The bank nifty is up 0.8%, the nifty is up 0.6%. Advance decline is now 3:1 in favor of the advances. The mid cap index is up about 1.6%. Mitesh and Prakash now join us with some strategies. Mitesh, a day to play on the long side, you reckon? What's the call now on the index and what are your stock calls?
Yes, Anuj, I think 10,915 is what I was looking at to be crossed. We are practically there, just crossing that. So yes, I think on stock specific basis, you might want to, explore some long positions and maybe, buy into call options on the Nifty. It's still a shaky market, so I think, I'll not be aggressive here, but maybe, attempting a part long with a 45 point kind of stop loss could be a good trade. You might see if 10,915 is held, 10,970 and then 11,020, 30 could happen on the upside as a stronger pullback. So let's see how it plays out. But for the time being, yes, we have attempted some longs. And on the stock side, I have a buy on Berger Paints with a stop at 334.9 for targets of 366. And Marico, if it crosses 380, that's a buy with a stop at 374 for targets of 395.
So your stop loss on the Nifty is what, 10,880? You said 45 points lower.
I actually took long positions once 11,915 was crossed, so around 870 is what I would suggest as a stop loss.
Fair enough.
Okay, well, the mid-cap index is something that I wanted to discuss. It's now up almost 300 points, 260 points to be precise, and lots of stocks, Berger Paints, Torrent Power, all looking good post numbers. Prakash Gaba is also with us. Prakash, hi, morning. What are your stocks?
Good morning. I think the market is up. If it closes where it is today, it's a buy for a couple of days. The next technical targets are 11,200. Have a stop below today's low and trade long for a couple of days. That's my view. Nestle looks good to me. Very good chance it can climb to around 11,900 zones. Stop below 11,700. NIT Tech is a good buy. And I think it's climbing to around 1250 zones. Stop below 1,200.
Where is your stop for the Nifty?
Today's low. The setup is such that if it closes even here, today, by the end of the day, it should be bought and taken home for a couple of days.
Other stocks, NCC is seeing a bit of a rally. There's a bit of a rally on in some of the beaten down commodity names. JSPL, for example, is up. Tata Global. Mitesh, Tata Global has done well even in weak market. Any thoughts on this one?
Yeah, in fact, it's not only held on very nicely on the downside, it's kind of also, managed to suggest that it could be possibly getting into a mild uptrend. So Tata Global, I think if I look at the chart, I think the recent swing high was around 274, 275. I think we had that as the first target, but I think that will be crossed. And once we start getting past that, good chance that we are looking at 293 happening over here. So there's still more trading juice left in over here. If somebody has it, I would suggest hold. If somebody wants to buy partly right now, and once it crosses this 278, 279, I think buy add more over there.
I wanted to come back to you for Trent. What a V-shaped performance of that stock. But before that, Prakash, Bank Nifty, is there a trade? Is your long applicable also for Bank Nifty? Or do you have a position in any of the banks?
Actually, Bank Nifty has given a buy now. Only thing, it needs to close here. It should not close in the red. In the sense, it should not close. It should be just closing around this levels by the end of the day. Then it generates a buy for a move maybe around 28,800. So far, it's a buy even for intraday. It can go up. If it goes up, it closes higher. That happens, buy for a couple of days.
Okay. And Mitesh, if I can finish the Trent question.
Yeah, I think Lata, this is a stock which was very close to the all-time highs, and then we saw some correction last week. It's kind of come back to those levels. So I would want to see the stock get past this 455, 460 zone, which is where we have multiple closings. And I think a close above that should suggest 520, 525 happening very soon. But I would want to wait for the 460 level to be crossed on a closing basis.
Okay, by the way, Yes Bank is the one which is now seeing quite a bit of surge. And today the setup was perhaps like that.
The whole quartet.
Exactly.
India Bulls, Yes Bank, DHFL.
Exactly. And the low was 79.5 on Yes Bank. It opened at 80. And after that, just a one-way rally. I mean, we all know it's perhaps short covering, but the highest the number of shorts in a stock, the bigger the rally is what you're seeing today. So Yes Bank, there's L&T Finance, which is now surging, DHFL, Indiabulls Housing, all these stocks.
Indian Bank also.
I just want to point out that in a strong market, one stock that has hit a new low is Bharat Forge. It's down 2.5% and it's hit a fresh 52-week low on huge volumes because of the way the North American truck sales have fallen. So not looking good at all for Bharat Forge right now. But let's thank our technical guests for joining us and taking us through what is turning out to be a strong session for the market. The Nifty is now up about 60 odd points. One of the big triggers for why the market has been holding up is a fall in crude, which is of course beneficial for us. Manisha is here to give us a roundup of all the action that we've seen in the commodity space today. Hi Manisha, good morning.
Morning, Sonia, and thank you for that. Well, yes, even with a bit of a gain that we've seen in the Asian markets today, the crude oil prices still are at around 7-week lows and $15 off from their 2019 highs. So just about holding $60 after hitting a $75 of a high in the month of Feb. Last night also, we've seen 3% of a decline coming in for the crude oil prices. But then there are reports from Strait of Hormuz on how Iran has confiscated an Iraqi oil tanker. And the US inventories also may be looking to decline for an 8th straight week. So those are a couple of factors which actually have been supportive for the crude oil prices. And in any case, the kind of decline that we have seen for crude, some buying is what is seen on the charts, and $60 per barrel for now on Brent seems to be holding well as a support level there. The gold and silver prices in the meanwhile have been quite volatile. It is about the rupee calculation that you have seen some decline come in for the gold and silver prices. But even with those kind of levels, 37,000 rupees on gold is an all-time high for the Indian markets. And remember, this does not include the VAT or rather the 3% GST, etc. So in the physical markets, the gold prices are much higher than what we see on the screen. It also is a 23-month highs continuing for the silver prices. Silver actually has gained about 12% in last 1 month itself, and the gold prices for the month of August itself are up by nearly 5%, even with that 0.5% decline that you see on your screens right now. The base metal prices have seen declines as well, with the currency concerns that we are looking at globally, the trading concerns on top of that, the weak economic data, all of that really seems to be weighing on to the metal prices. The Shanghai metal prices have all declined between 1 to 3% in the Asian markets yet again today, and we are looking at LME prices under pressure as well. The weakness in US dollar is the only positive that perhaps binds the commodity markets, and that could be a bit of give you a cushioning effect, but the fundamentals really continue to be on the bearish side. As I was telling earlier as well, copper prices trading at a 2-year lows. You have zinc at 11-month lows. Nickel prices have declined by 5% in the month of August until now already. And we are looking at sharp declines in other commodities as well. So whether it's iron ore or steel in Shanghai are trading on the weaker side. You have rubber trading at an 8-month lows, cotton at 3-year lows, soybean prices at multi-month lows as well. So with what China is going through, you have seen very sharp declines come in for all of those commodities. But buying in gold and silver is what we see as recommendations coming in from brokerages. KD advises a buy in gold, 37,400 is the target on that one. And silver prices as well is a buy, 42,900 is what you could see today.
Okay, thanks a lot for that. Gold at all-time highs. Manisha, Anuj has been listening to you and has moved into gold for the last 6 months, he says. Okay, anyway, don't take me seriously.
Lucky his wife, not him, right?
Children, no, 2 daughters. Okay, well, let's get back to numbers. Indian hotels saw a slightly subdued top-line growth on the back of a seasonally muted quarter for the hotel industry. Here's more from my colleague Priya Seth, who spoke with Puneet Chatwal, the Managing Director and CEO.
Revenue growth really is being driven by our market share development as number one. We have increased market share in 1/3 of our portfolio. And second reason is for us in the first quarter, US and UK with our property in London have come in quite strong for us. There has been a dip because of jet in some of the other domestic destinations. There has also been a dip on our revenue share with our flight kitchen business with TajSATS. But I think especially London performed very strongly and helped us to mitigate any of those dips in revenue. And some of our star assets like those in Mumbai, the Land's End, the Taj Mahal Palace Tower, the Taj Palace in Delhi. I think they all did very well, especially in June, and have continued that trend also in July.
Can you quantify the dip that you've seen owing to jet across your businesses?
It's very difficult because you have to then say how much was the crew staying in the hotels, how much is the flight kitchen, how much has been replaced with other airlines coming in and taking on that business. But I would say that definitely on a year-on-year basis there is a few percentage points of erosion of revenue which was coming through that source.
Margins have expanded by 304 basis points. Can you break up the margin expansion for us?
Well, yes. Operationally, the margins have expanded by around 130 basis points. That's the operational EBITDA. And then we have the monetization of non-core assets, which helped us to get to 304 basis points. But all that is a part of our strategy. All that is a part of our margin expansion theory. And we said we'll continue to do this. The growth will come by increasing our market share, growth of our asset-light business model, which we call as a smart way of growing, and we are adding new hotels. New hotels are opening, so our share of management fee income is growing. So obviously that helps in growing a margin versus a owned asset in the first 3, 4, 5 years of operation. The third is the monetization of assets. Fourth is the control of corporate overheads, which as a percentage of revenue is continuously declining. So I think there is not that one answer. It's a combination of things that you have to do consistently. Otherwise, you would have one quarter you grow and the next quarter you dip. And we have done that for the last 5 quarters quite consistently.
Give us a sense on debt. You have, over the last couple of years, you have looked at reducing debt. So at this point in time, what does it stand at and what is the further scope of reduction?
We are still at around 2,000 crores of debt, and the management remains focused and driven to reduce debt. So we've just unwound a swap that has no impact on our net debt, which still stands at 2,000, but it helps us against any kind of forex volatility. So I think we are very pleased with that. It's a small amount, but every quarter if you're able to do a small amount, then you keep marching ahead. And we've been able to bring down our debt to equity, which was a couple of years ago at 6.5, is now at 2.1, and hopefully below 2 as a few more quarters go by. And definitely before the end of the year.
So by FY20, how much do you think you can reduce?
Definitely below 2. That's for sure.
A very interesting partnership during the quarter was the one with GIC, where you'd look at 4,000 crore rupees and you'd look at potential acquisitions in the distress space. So any targets that you've identified? The last time we spoke, you said you've almost finalized on a couple of options.
Not finalized. We had started studying a couple of options. Now the list has become a bit more extensive, and hopefully within the next quarter or so we should be able to announce at least our first project.